Good morning. It's Tuesday, June 1st, and I'm Kenny Polcari, host of The Party, Morning Market Commentary. It is Tuesday, June 1st, the start of the last month of the second quarter. I can't believe we're almost halfway through the year, and there is a lot going on, and there's more ahead. So let's talk about it. U.S. futures are up this morning. Oil is up this morning. Cryptos are down. The 10-year is flat. Gold is up this morning, right? It's a new month. The mood is bullish. The VIX remains very complacent. European markets are all up this morning. They are higher as U.S. futures are higher. Key data points this week. ADP employment on Wednesday and the non-farm payrolls report on Friday. Two metrics that are going to be keenly watched. Next Fed meeting is June 15th and 16th. So that's going to be very important to watch as we wonder about what they're going to say about not only monetary policy, but about tapering. Is this the month that they're going to talking about tapering, or are they going to continue to hint? In addition, this week on Wednesday, we have 4 Fed presidents that are going to take to the airwaves. And so we'll talk about that later on. And what are we having for dinner tonight? We're having the Roman-style chicken. It's a great dish. You make it in one pan. It's easy to make. It's really delicious, and it's an easy cleanup. So look, it is June 1st, right? The markets remain strong. We're closer to the highs than not, right? The S&P is just less than 0.5% away from the highs. Investors, traders, analysts, and economists all attempting to decipher what is happening, what's going on with the economy, what's going on with the Fed, with monetary policy, with tax policy, with infrastructure policy. Futures are high this morning, and the national and global mood is bullish, right? The month of May saw stocks and cryptocurrencies make dramatic moves. And we know that, right? Causing many investors, retail investors, asset managers to really wonder what's next. The Dow gained about 2% for the month. The S&P gained about 0.5%. The NASDAQ gave up 1.5%, although it rallied into the end of the month, but it still gave up 1.5%. And the Russell eked out a gain of just about 0.4%. Bitcoin, which has had a tough couple of months, ended up the month of May down 35%, but that doesn't begin to tell you about the volatility intra-month and that 2-week period where we saw Bitcoin lose nearly 45% of its value between May 7th and May 23rd, right? It rattled investors' nerves, causing many to opine on what's next for the cryptos. Some claiming that, this is the beginning of the end. Others claiming that Bitcoin is still in its infancy. And so that's what's responsible for its volatility. And while that may be true, it doesn't make it any less unnerving for investors and for people that are, trying to dip their toes. But what's interesting, and you have to look at this on a chart because it's forming a classic head and shoulders pattern on the chart. So at least it looks like that. You can see that the January action represents the left shoulder, and then the February through May action represents the head, right? So you have to watch it. You got the shoulder, then you got the head, and now the action in the last half of May, it looks like it's going to be the right shoulder that's being created at the moment. And that typically suggests that there are lower days ahead. And if you draw the line across the neck, which is at the 30,000 level, you'll see that, in January, that's where we were at 30,000. Then we had the shoulder, the head, and now the shoulder again. It came down and tested 30,000 during that crackdown in May. It rallied, it tested it again, and it rallied, and now it's weaker again this morning. It hasn't cracked 30,000 yet, but if on the third time it cracks 30,000, the chart then suggests that the bottom will fall out and that the next move would be down about another 30%, would take it down $10,000 to 20,000, would be the next level of real support according to the chart. So listen, while it's not necessarily, a definite prediction, it is certainly something to keep your eyes on as you watch how the chart unfolds and how the chart develops, because typically that head and shoulders pattern does create a move like that if in fact it plays out the way that history shows. The eco data on Friday continues to show mixed results, but the key data point was the PCE, which is the Personal Consumption Expenditure Index. It's a core deflator report. And what it showed was a rise of inflation to 3.1%, up from 1.8%. So it was a significant move up. But again, it was a move that was expected, right? The Fed has been saying it. Jay Powell's been saying it. We got other members of the Fed saying it. Treasury Secretary Yellen saying it. And so therefore, it wasn't out of the blue. They've done a good job of jawboning it. And so it's very interesting. Yet you saw no reaction in the market. Quite honestly, you saw the market with the S&Ps and the Dow and everything, which had been higher, just backed off a little bit, but all ended the day in positive territory. The 10-year Treasury yield actually fell a little bit and closed the day at 1.6%. Suggesting that this whole inflation fear story is way overblown, right? Just as Jay Powell says that he's not worried about it, so no one else should be worried about it. And that is kind of how the market's reacted. And then we have our friends at Goldman Sachs, right? They're coming right out suggesting that the inflationary pressures that we are seeing are the good inflationary pressures versus the bad inflationary pressures. It's like the good witch and the bad witch, right? The Glinda, the witch of the north, and then the wicked witch of the west. If you remember the Wizard of Oz, right? And so the good inflation is driven by an improving economy and rising wages, and that's all positive, and everybody's going to do better. A rising tide lifts all boats. Versus the bad inflation, which you could credit to an error in monetary policy. Right now, you know how I feel about it. I think that's exactly where we're going because I think that monetary policy has been too supportive for too long. Rates are too low for too long, and they're expected to still remain low for another 2 years, which I don't see. But one way or the other, Goldman Sachs says that there's no reason to worry that the inflation we're getting is the good inflation, while Jay Powell keeps telling us it's just transitory, right? Remember that the next meeting is June 15th and 16th, and everyone's going to be watching keenly to see what they reveal. What will they say? They're going to continue to say it's transitory. They're going to continue to say it's nothing to worry about. They're going to continue to say they have it under control. But the question is, are they finally going to say, okay, now we're going to start talking? They're going to stop with the hinting about hinting, and they're going to hint about talking. Now, I don't suggest it's going to happen in June or July, but I do suggest that they're preparing that runway and that it's a conversation that is going to happen sometime in the fall, would be my guess. At a time, actually, when the markets are also relatively volatile. September and October, remember how those months can be. And so it's going to be curious to see if they start talking about the tapering right in the middle of that kind of volatility, or whether or not they wait until we get more towards the end of the year, November, December, when things seem to calm down a little bit and markets are less reactive. Like I said, on Wednesday, we're going to hear from 4 Fed presidents, right? You're going to hear from President Harker, Evans, Bostic, and Kaplan. And it's going to be very interesting to hear what they have to say to investors, right? Ahead of the next Fed meeting on June 15th. And we know how they feel, right? Bostic thinks everything's okay. Harker and Kaplan think that we need to start hinting about talking. And Evans and Bostic are on the same page, while Harker and Kaplan are also on the same page. They're opposite pages, but that's how that lays out. And so it's going to be very interesting to hear how these guys present. This is a holiday shortened week. Yesterday we had the day off for Memorial Day. U.S. futures this morning are solidly higher. Right? The Dow is up over 220 points. The S&P is ahead by 22 points. The Nasdaq's up over 60, and the Russell's ahead by 15 points. European markets are all higher. European markets across the board are up about 1%, maybe a little bit more. So if we follow in those footsteps, we're going to blow right through the most recent highs of 4230 on the S&P. Probably right on the opening, before the opening bell even stops ringing. And we'll test a new intraday high and potentially end up making a new closing high if the conversation remains as excited as it is this morning, right? Remember, there are there's a bunch of macro data reports this week, but the two ones that people are going to be paying very attention to is Wednesday's ADP employment report and Friday's non-farm payroll report. 10-year treasuries this morning are yielding 1.61%, right in line to where they closed on Friday. The dollar index is now trading below 90 at 89.78. Gold is up $8 at $19.13, which continues to tell about the inflation story. Right? Because gold keeps advancing, and gold would advance if people are using it as an inflation hedge. Bitcoin is trading at 36,000. Ethereum is trading at 2,500. Right? They had kind of another tough weekend. They were all over the place, testing down as low as 30,000 again on Bitcoin, but then bouncing. And today it's trading at 36,000. West Texas Intermediate crude is up $2. or 2.8% this morning, now trading at $68.22. It's less than $1.80 away from the $70 mark that I've been screaming about for a couple of weeks, and we just through Memorial Day, right? So I suspect absolutely for sure West Texas is going to be trading at 70 sooner rather than later, and I think it's going to be certainly ahead of the 4th of July holiday, and then what you're going to see is gas go up at the pump. So need I say anything else about that? I don't think so, right? We've talked about that enough. Like I said, European markets are all up this morning. Final IHS market manufacturing across the zone came in at 63.1, beating the estimate of 62.8, leaving that solidly in expansion territory. Factory orders in the UK, this is important, rose to 65.6. That's up from 60.9. It was a significant move higher. As this boatload of new orders drove that industrial resurgence story in manufacturing across the UK. It's all positive, right? The S&P closed at 42.04 on Friday, after trading as high as 42.18, and then it kind of backed off as we moved into the day, but yet still ended higher on the day. This morning, like I said, this morning the futures are much higher. We're going to trade right up and through 42.18 on the probably by the time the bell stops ringing, and then we're going to challenge 42.30, which is the all-time high, which I think is probably very easily done. And look, with European markets up better than 1%, if we're up better than 1%, we're going to blow right through 42.30 as well. The broader channel now, represented by new trend lines that you draw based on actions that's traded over the last month. The new channel is now 41.15 as support, which now represents the 50-day moving average. And on the upside, we've got 4,300 on the S&P. So the range is now 41.15, 4,300. So anywhere in there would be considered normal trading. So get ready, right? I'm still very much in the cautious camp. And I continue to believe that the volatility is not over yet, but that doesn't mean I'm running out the door and selling everything. It doesn't mean that at all. It just means I'm trimming where I should, and new money that I'm putting to work in underperforming sectors to make sure that I maintain a good balance. You know what you can do? You can text the word invest to 21,000, get my digital business card, download it. Feel free to reach out, text me, email me, give me a call. I'm happy to talk about what's on your mind and talk about markets and kind of talk about where the plan is going. So what are we having for dinner tonight? This is such a great dish. You make it in one pan. So you mess up one pan, that's it. It's an easy cleanup, and it's a great dish to make, and it's good, and it's good for you, right? So it's Roman style chicken. And so what do you need for this? You need the chicken breasts and thighs on the bone, skin on, salt and pepper, olive oil. You need red and green peppers. You can put yellow peppers. You can put the whole bunch of different color peppers in it to make the dish more colorful. You need prosciutto. You need garlic. You need diced tomatoes, not crushed tomatoes. You need the can of diced tomatoes. You need white wine, thyme, oregano. Fresh is always better, but if you have dried oregano, that's all you have. You need chicken stock, capers, and parsley. The parsley is really just for color. It doesn't really add a whole lot of flavor, but you put that in right at the end to give it some color. So here's what you do. Rinse the chicken, pat it dry with paper towels. You know the deal, right? Season it with salt and pepper on both sides. And then set it aside. Get a big, heavy skillet, one that's going to accommodate all the chicken and the sauce that you're going to make, right? Put the olive oil in, go around 2 or 3 times, heat the olive oil up, get it nice and hot. You want it to sizzle when you put the chicken pieces in, right? Now listen, the chicken is going to draw the heat from the pan. You want it to sizzle. So if you have to brown the chicken a couple of times instead of trying to do it all at once, that's fine. Just, put a couple of pieces in there, 3 or 4 pieces, depending on how many pieces you're making. Let them sizzle, keep the heat up high, let them sizzle, not burn. Turn them over until they get nice golden brown. That once they're done, take those out, set them aside. If you have to repeat it with more chicken, go right ahead, and then take those out and set them aside. Now turn the heat down to medium. And here's what you're going to do. You're going to add now, you're going to take all your sliced peppers that you got, the red, the yellow, the green, the orange, whatever. You're going to take those sliced peppers, you're going to put them in the pan. You're going to add prosciutto, which you've taken, you've diced, you kind of chopped it, right? Don't dice it really small. Leave it, chop it. Rough chop it so it's a little bit big, because once you put it in there, it's gonna cook and then it's gonna shrink anyway, right? You know how prosciutto gets, right? You're gonna saute this until the peppers get a little bit soft and the prosciutto's all cooked. It might be I don't know, 5 or 8 minutes. It's not a long time, but don't leave the pan. Be there, stir it around to make sure that it doesn't burn. Right now, you're going to add the chopped garlic. I would take 2 or 3 cloves, depending on how much you like garlic or not. I would use 3 cloves. Smash the garlic with the side of the knife, and then just rough chop it. Put the garlic in with the peppers and onions and the prosciutto. Let that cook for, stir it around, blend it all in, let it cook for 2 or 3 minutes. And now you're going to add the can of diced tomatoes, right? So take the can, open it up, just juice and everything, just put the can right into diced tomatoes. You're going to add about a half a cup of white wine. Use a dry white wine. Don't use a Chardonnay. You know me. I use Pinot Grigio Santa Margherita, but you use what you want. But you're going to use about a half a cup, maybe 3/4 of a cup, again, depending on how much chicken you're using. And then you're going to add oregano and thyme, right? Just to taste, right? So add it, taste it, just make sure you don't overdo it. You're going to bring it to a boil. You're going to use a wooden spoon to scrape the bottom of the pan in case, there's any chicken parts that kind of stuck to the bottom of the pan. Just scrape it up when you heat it up. Bring it to a boil. Let the alcohol from the wine burn off. Now you're going to add the chicken stock, about a half a cup of chicken stock. Just bring that to a boil. And now once it brings to a boil, reduce the heat to simmer and let it cover. Cook it for you're going to add back the... once you bring it to a boil, you turn it down to simmer. Now you're going to add back all the chicken pieces. Put the chicken pieces right in the pan, arrange it so it's nice, and cover it, but leave it on simmer now for probably 30 minutes, maybe 35 minutes. At the end, don't cook this all long, but at the end, when you got about 5 minutes left, you're going to add the capers. So drain the water from the capers, and just add the capers. One of those glass bottles of capers. And you can take the chopped parsley, right? Add the chopped parsley, just put it on top. It'll add some color. And then when you serve this, you're going to serve it on like a family-style platter, and you're going to put it in the center of the table, right? Because it presents beautifully. Make sure you have a big salad, however you like it. I'd use like a romaine lettuce, tomatoes, cucumbers, salt and pepper. I'd season it with salt and pepper, oregano, fresh lemon juice, and olive oil, and I'd toss it and make it very simple. And then, you can finish drinking whatever wine you use to cook with. You can certainly have that chilled and finish that bottle of wine with this dinner. It's a great dish. It presents beautifully. It looks great. Once you put it on the table, if you're having, it could be one of those dishes you're having either at a dinner party or you just have guests over. It really presents well, and it's really, really delicious. Let me know if you make it. In the meantime, take good care, and I'll see you tomorrow.